Hi, welcome to this video where what I'm going to be looking at is control accounts. Last time I looked at the sales ledger control account, which is also called the total trade receivables account or the total trade receivables control account. This time we're going to be looking at the purchase ledger control account, which is also called the total trade payables account and the total trade payables control account. So if you're doing a question from a textbook, it may be called any of those three things. They are all exactly the same. Quick look at the basics. The basics are very similar to looking at a sales ledger control account, only this time we use all the information from the day books for purchases, and we'll be looking at the credit columns of the cash book. And again, what we are doing is obviously during the course of the month as transactions occur, they get recorded in the the supplier's accounts, and purchases go on the credit side. Again, I've deliberately made a mistake down here, so otherwise you should see all the purchases going on the credit side of customers' accounts, because we debit purchases because they're either an expense or we can look at it as gaining an asset of inventory, and we credit the the supplier, because the business now owes the supplier some money, and that's a liability. Everything from the cash book, including the discounts received, they appear on the debit side, because we credit the bank because we are losing money. We debit the supplier because it reduces the amount of money the business owes to them. And the purchase returns also go on the debit side of the supplier's accounts, and that's because we credit purchase returns because we're losing an asset of inventory, but we debit the supplier's account because we're losing the liability or reducing the amount of money that the business owes to those suppliers. Right, we'll have an opening balance. In this case, I've put all the opening balances into the supplier's accounts, and they total 1,050. In the control account, it goes on the credit side because the control account is replicating what's happened in the purchases ledger to all the supplier's accounts. So hopefully I've got 1,050 on the credit side. We then take the totals from the purchases daybook, purchase returns daybook, and the cash book, and put them in the appropriate side of the control account. Okay, so So the total of all the purchases from the purchases daybook is $1,590. What I've done, I've linked them all together, so it should be there. Okay. We've got the purchase returns were 150, the discount of 80, and the bank entry of 970. They all go on the debit side because they are reducing the amount the business owes to suppliers, and then we balance off the accounts in the normal way. So the credit side this time will always be the bigger side. The credit side comes to 3,000. It's a nice round number. Therefore, the debit side has also got to be 3,000. And then we work out the balance carried forward by subtracting the receipts, the discount received, and the purchase returns amounts. And then don't forget to put the balance brought forward. Something I didn't mention on the previous video, but I'm just going to quickly cover it off now. Most of the transactions in the control account, because we're looking for the whole month, are done on the last day of the month we're doing the calculations for, or doing the control account for. The exception are the opening balances, and they are done on the first day of the month. So for example, looking down here at the balance brought forward for the 1st of June, it's done for the 1st of June, not the 31st. So in an exam, getting the marks of the dates should be quite easy, because you'll only have 3 dates to worry about. Right, now what we will notice here, we've got a slight anomaly, because the control account says that we should owe $1,800, and yet looking at the totals owed to the individual suppliers, coming down, if we do that, we owe 450, 40, and 950, which totals $1,440. So there's an anomaly there, and what that's proving is that we must have made an error somewhere in the purchases ledger in one of the supplier's accounts. Now, as I told you earlier, I do know where the error is because I've done it deliberately, but we had a purchase of $400 from Thomas, and we've only recorded it as $40. So if I change that to 400, provided all my links work properly, okay, what we can now see is we now owe Thomas $400, not 40, and therefore the total that we owe all of the suppliers in our purchases ledger is the same as the control account, and therefore it's done its job. It's shown us that there's an error, and we've gone away and found the error and corrected it. Exam style questions. Okay, very, very similar to doing a sales ledger control account or total trade payables account. You may well, in fact, normally in an exam you'll get distractors. So in this case, it's cash purchases that don't go in. Cash purchases don't affect credit customers because we've bought, credit suppliers because we've bought them for cash. And also it's possible that we might have an unusual debit opening balance because what may have happened is goods may have been returned, for example, after a supplier's been paid, or after we may, for example, have made an error and paid a supplier too much. Okay, so we put the opening balances in exactly the same way that we did for the sales ledger. What's different is the main opening balances on the credit side because the business owes money to their suppliers. Put the credit purchases in, they're no problem, they're quite straightforward. They go on the credit side, we debit purchases, credit the supplier, and therefore we credit the control account. Payments to credit suppliers and purchase returns and the discounts received we've already talked about. They all go on the debit side because it reduces the amount of money that the business still owes to the suppliers. Okay, and then we've got a couple of unusual ones here. The contra we spoke about in the previous video, but the contra is where we buy things off a supplier, but we also sell things to them, so they're also a customer. And what businesses often do, they will work out whether they owe or are owed the smaller amount, and that will get written off in the two accounts, and then they will send a check or receive a check for the balancing amount. Rather than sending two checks for the whole amount, it just reduces the transactions down. So in this case, for example, the contra was for 700, and it goes on the debit side of the purchase ledger control account or total trade payables account because it's reducing the amount of money owed to the suppliers. In the same way, it goes on the credit side of the sales ledger control account because it's reducing the amount of money that person owes as a customer. And we finally got a return check. So, for example, we may not have filled the date in correctly. We may have forgot to sign the check, or we may have forgotten to put the numbers in. So we may have written the amount that the check's for correctly on the check, but forgotten to fill in the little box where you have to put in the number values for what's owed. And that will go on the credit side because we've included in these payments that we made on the debit side, reducing the amount owed. But when we got the check back, not all of that money will have actually gone out of our account. So it goes on the credit side, and we've got this closing balance as a debit. Now the debit means that the opening balance at the start of next month is on the debit side. So we put that in on the debit side there, and obviously therefore has to go on the credit side as a balance carried forward. And as I've mentioned already, that's the amounts that the suppliers owe to the business for these unusual things that have happened, like an overpayment, like returns after payment. And then we are going to total up the credit side because that's always going to be the bigger side on a purchase ledger control account. Put the same amount on the debit side, so it's standard balancing off that's hopefully easy to by now. And when I subtract all the figures I've already got on the debit side, the balance brought forward, the small one, the payments, purchase returns and discounts received from the total, I get a balance carry forward of 11,150. And that then becomes my balance brought forward, or the amount that I owe to the business owes to their suppliers at the start of the next month. As you would expect, I have put you some student questions in there for the people that I teach. There we go. Good luck with those. Obviously, if I teach you, you've got your deadline to get them back to me. Please get them back to me so I can give you some feedback. And I'll see you again very soon. Good luck.